Hello guys, welcome back to my YouTube channel. The video discusses the global financial crisis of 2007 to 2009, its causes, effects, and lessons for investors. The GFC was a severe financial crisis that had a profound impact on the global economy and stock markets. Here's a detailed summary of the key points in the video. 1. Overview of the global financial crisis, GFC. The GFC occurred between 2007 and 2009, triggered by problems in the U.S. housing market. It led to a severe global economic recession, the deepest since the Great Depression of the 1930s. 2. Causes of the GFC. Excessive risk-taking. During the economic boom, borrowers, including subprime borrowers, took on risky loans to purchase houses, increased borrowings. Banks and investors borrowed extensively to expand lending and purchase complex mortgage-backed securities, blah. Regulatory failures. There was insufficient regulation of subprime lending and MBS products, allowing fraud and excessive risk-taking. 3. Effects of the GFC. Falling house prices. The crisis began with a decline in U.S. house prices, causing borrowers to default on mortgage payments. Financial stress. Banks and investors faced large losses due to the falling value of MBS products. The financial system experienced a panic. Global impact. The crisis spread globally, affecting banks and economies worldwide. Many people lost their jobs, and recovery was slow. 4. Policy responses. Central banks lowered interest rates and engaged in quantitative easing. Governments increased spending to stimulate demand and support employment. Deposits in bank bonds were guaranteed to restore confidence, and ownership stakes were purchased in some financial firms to prevent bankruptcies. 5. Lessons for investors. Don't assume good times will last forever. Economic cycles are inevitable, so don't assume that a strong economy will continue indefinitely. Avoid over-leveraging. Excessive borrowing and risk-taking can lead to significant losses when economic conditions deteriorate. Understand regulatory environment. Be aware of regulatory changes and shortcomings that can impact financial markets. In summary, the global financial crisis was a result of various factors, including excessive risk-taking, increased borrowings, and regulatory failures. It had a profound impact on the global economy and financial markets. Investors should learn from this crisis by avoiding overconfidence in strong economic times, practicing prudent financial management, and staying informed about regulatory changes. If you enjoyed this video, please like and subscribe to my YouTube channel for more videos.